From Dubai, Ziad Awad, CEO of Awad Capital Limited. Ziad, welcome. Overall, we notice significant increases in US bond yields since Donald Trump's election victory, which were further strengthened by Jerome Powell's recent statements. What is the reasoning behind these increases? Ziad.
There are several factors and reasons for the significant increase in interest rates on US government bonds. The first reason is the fear of rising deficits. In the US government, it was Trump or Harris who expected that the deficit, which is strong, would increase. This is the first reward. The second thing that happened is that with the strength of the US economy, expectations of a decrease in the Federal Reserve interest rate decreased. I mean, even though the Federal Reserve lowered interest rates by 75 points, it is expected to drop to 25 after this year. The expectations for 2025 and beyond have significantly decreased. There are some predictions that there will be a rate cut in December, then at the beginning of the year, and then a halt to the cuts. Many investors are even worried that there might be an increase in federal interest rates. Why? Because although inflation has decreased, there are indications in the recent numbers that suggest the battle against inflation has not yet been won by the Federal Reserve, and they might be forced to stop lowering interest rates.
Ziad, with the shift in the White House, House of Representatives, and also the Senate all turning red, what effects do you see on US fiscal policy? And then, of course, how will this affect the future regarding the current monetary policy and the interest rate reduction cycle?
The question is good. As you noticed, and you asked me about interest rates, I didn't talk about policy. I talked about the economy and inflation at the same time. Most analysts expect that Trump's policy and the Republican Party's policy will lead to increased inflation and increased deficits, both of which negatively affect long-term interest rates. This includes tariffs and tax cuts. However, honestly, it is not clear what this new American government will do, but what we see for sure is that the economy is strong, and it has been resilient despite the war.
Since we are discussing this, in light of Trump's promise to raise Republican tariffs, are we facing a new wave of inflation?
It is possible, very possible, that inflation will return. And let's not forget the analysis I saw regarding how governments with large deficits solve the deficit problem. The easiest solution is inflation. Inflation is the solution for those who have a lot of debt, as it allows them to pay these debts with less value. Let's see.
And let me point out that despite the rise in Treasury bond yields across the curve, we notice that the credit spreads in the United States have narrowed significantly. How do we explain this optimism?
You are talking about the difference between US Treasury bonds and corporate bonds. In my opinion, this narrowing of the spread between US Treasury bonds and corporate bonds indicates the good health of American companies. On the other hand, the weakness and increased uncertainty regarding US government credit means that as this spread narrows, it tells us that the credit of the US government is weakening, as well as the strength of corporate credit. So we can say that this weakness in Treasury securities has also led to some pricing of what might happen politically in America.
In light of the current family environment, Ziad, what bond periods do you find most attractive for investment?
Still currently prefer the short end of the curve due to the flattening of the curve and also the risks surrounding inflation. Certainly, inflation affects long-term bonds more than short-term bonds.